easily the number one question I get asked pretty much every single day. What levels do you trade from? Now, before I start this video, I want you guys to understand that it's a valid question. I struggled for years trying to understand which levels are the best to trade from. That is until I realized there is no correct levels to trade from. It's way more valuable to have one system that you can deeply understand, and it's simple enough that you can execute it over and over and over again. So before I show you guys this system, I want you to understand that this is not the single correct way of finding levels to trade from. The reason I want to show you guys this is because this is probably one of the most simple ways you'll be able to identify levels to trade from. And what that allows you to do is repeat that process over and over and over again. And truly, I believe that is way more valuable than having a good system versus having a system that you deeply understand and you can accurately identify to execute trades consistently over the long term. But without further ado, I really think you guys will understand this, grasp this concept, and be able to at least implement it into your trading. But as always, remember guys, backtest it. That's the only way you're going to be able to understand these entries. Please subscribe and enjoy the video. Okay, so the fundamental basis of everything I'm about to talk to you lies on break and retest. Okay, if you don't know what that is, it's very simple. Essentially, it's just price breaking a level, coming back to that level, and then continuing. Okay, and that's all we're trying to do with this strategy is, let's say there's the level. We want to identify this exhaustion phase. We want to identify the end of that exhaustion phase, and then we want to enter right as price is beginning a new push phase, and that's where we profit. Okay, but in this video, I want to talk to you guys about how we can identify these levels, because it can become quite hard or tough and confusing, but it shouldn't be. Okay, I want to make it as clear as possible and understandable as possible. And again, take this with a grain of salt. This is not the best strategy out there, but it's one that you can easily understand and create consistent profitability with. So in order to understand this, we need to break down the three setups that I trade. The first one is a continuation from a trending market. The second one is a reversal, which is also a continuation, and I'll break that down how it's also a continuation, so don't worry about that. And the last one is a breakout from a consolidation. Now, all three of these are very similar, okay, but there are some key differences we need to be able to understand in order to identify these key levels. Okay, so let's start with a continuation over here. The first thing is we need to be able to identify trending markets, okay, and this also is important for this reversal setup, okay. So the only thing we need to be able to understand is that when we're trending up, which is characterized by making higher highs and higher lows, price remains above the previous higher low structure. So what does that mean? This. So let's highlight the higher lows right here, higher low formed. Right here, higher low formed. Okay, so just because price doesn't break this structure and make a new high doesn't mean we're no longer trending up. Okay, as long as we remain above that previous high low, this is still a valid uptrend. Okay, and there's two situations we trade this. The first one is here, and this is called a perfect break and retest, where price breaks a level, creates a new high, comes back to that level, and then continues. The next one is where price comes back to that level, doesn't quite make a new high, but respects the previous higher low. We can still trade off of the level back here and continuation. Okay, notice the only areas we're trading from is previous highs, which is this one right here, and previous highs, which is this right here. Okay, there's going to be times where price does something like this. Okay, now this is the hardest one to be able to identify because there's two levels to trade from. You got this one right here, and then you got this one right here. Notice they are both previous highs, okay? And we still have a valid uptrend because we remain above the previous high-low structure, which is this right here. So this is always hard to be able to identify where to trade from. These are easy because you just trade from the previous highs. These are hard because it's unsure. So the rule of thumb is as long as the market is still trending, which is this right here, we're remaining above the previous high-low. So don't worry about whether we make new highs or not. We always trade from the previous high. That is this level right here. Okay. This is the most previous high. This one right here, not this one. Okay. Obviously, it's not always going to work like this. There's going to be times where price is going to bounce off of this level and continue. You miss out. That's how trading is. You can't pick every trade. You just need to be able to find your setups and execute them consistently. Okay. So with the uptrends, most important things to remember is we remain above the previous high-low structure. We break above the previous high. We come back to that high, and that's where we enter. Okay. At the most recent high that's been made. Okay. In this one, we don't create a new high, but as soon as we break above this level, we can start looking for retest at the most recent high. Okay. That's all we need to be able to look at. With a downtrend, it's the exact same. We need to be able to identify lower lows and lower highs, and we need to wait for price to respect the previous lower high. If that doesn't happen, the downtrend is no longer valid. Okay, so exact same thing, previous lower high right there and right there. We need to remain below that level in order for this downtrend to remain valid. Okay, and with these, the only levels we trade from is the previous lows right there and the previous lows right here. Remember, we want to wait for the break of the previous low in order to activate this setup. If we look at harder examples where price creates something like this, remains below the previous lower high, we want to trade from the most recent high, which is this right here, not this one. Okay, again, it could happen where price rejects from there, but we want to remain there. Okay, that's all we need to know for those. We'll go through some examples right now. So first example is literally right now in the live markets, and it's just a continuation to the downside. If it was an uptrend, it'd be the exact same, but the opposite. Okay, so this is called the perfect retest, and what we have here is price creating a lower low, a lower high. There's that break. So the level we're looking to trade from is the previous low. Whoops, not like that. Okay, the previous low, which is this right here. Now, as soon as we break and close below that level right there, this setup is activated or it's ready to trade. We wait for price to push back, and then on the entry timeframes, obviously we have certain things we look at, and here's a video you can watch if you want more info on how to trade the lower timeframes to find the best entry. But this video is about identifying levels, and this right here is the previous lower low in a trending market. So that is the level we look for. This next example is one of the harder ones. And keep in mind, if it's an uptrend, it's the exact same, just the opposite. So let's break this down. First of all, we can see we're clearly pushing down. We create a lower low right here. So a low structure right there. We push back to create the exhaustion. Lower low exhaustion, and that's that lower high being made. Then we can see we come down to this level, create a new lower high, and then push down and close again below that level. So first of all, we need to be able to identify whether this market is still trending down, because we're not pushing down, immediately breaking the previous low. What do we know? We remain below the previous lower high structure right here. Okay, we can see the next lower high is below that level. So this is still a valid downtrend, even though this candle does not break the previous lower low right here. Okay, we still are counting this as a downtrend because we remain above the previous lower high structure. Okay, so what levels do we now trade off? Well, let's look at this. The most recent low is this one right here, okay, formed by this candle. We can clearly see this right here is the most recent low. Okay, that is the level we trade from. So as soon as we see price break below this level and close below that level on the 4 hour, we can wait for price to push back to this level and then continue down from there. Okay, and we can see obviously with these wicks, the 1 hour did indeed push back to that level. And again, if you guys want to figure out more about how to trade on the lower time frames, you can watch the video I recommended earlier. Okay, but this is the key thing to note. Okay, we're not trading from this level. Okay, we're trading from this level. This is a nice example because I feel like either level could have worked, but it's not always going to happen like that. Now, the reason I say I want to trade from this level and not this one, okay, is because often people will, price will break below here, price will push back, okay, back to this level, and it'll present an entry. So let's just get rid of this. It'll present an entry. People will enter short here at the wrong low, okay, and price will wick out like it does there, and you get stopped out. Okay, so it's a safer option to wait for the most recent low because it's a deeper pullback. Okay, so that's the only reason I like to wait for that. It creates consistency, and you can see this is really not very hard to understand. We wait for the break and we trade off the previous most recent low. And uptrend's the exact same but the opposite. All right, so we've ticked the first one off our list, continuations. As always, if you guys have any questions about it, drop a comment. I'm still quite new to this, so if I don't explain it that well, feel free to ask any questions. Okay, so the next one is reversal. If we just fix the spelling, and this one is very similar, but it's obviously a reversal. So the basis of this one is we want to utilize what we talked about earlier about price remaining above the previous higher low. Okay, and as soon as that rule's broken, we can start looking for reversals. Okay, so let's look at what this looks like. Let's say we're trending up, we're making highs, we create a higher low, we failed to make a new high. Okay, this is still a valid uptrend, we're remaining above this level, but then we break and close below the previous higher low. Okay, so this shows potential evidence that price has not only failed to make new highs, created a double top, and broken below the previous higher low structure, which for us, for our rules, makes this not a valid uptrend anymore. Okay, so what's the next step? Trade on the previous lower highs and higher lows. Previous higher low right there, continuation. Okay, and the reason this is also a continuation is because the same market structure is formed. We have a structural high, then we push down, oh, not that one. We push down, make a lower low, and then we enter on the lower high. Okay, so lower low, lower high, continuation. It's still a downtrend. Even though it doesn't look like it, it's still a downtrend. Okay, another thing to sometimes help to look for these is a break of the trend, although I don't think it's necessary. It's more just, you know, a nice way to see it. Okay, so the other option is, you know, something like a head and shoulders, which is just something like this, break below the previous higher low and continuation. Okay, but this is almost more like a consolidation breakout. But yeah, that's the other option. We create a head and shoulders like this, and we break below the previous higher low, which is right there and there. Okay, exact same thing, just a different structure. Okay, if we're looking at downtrends, it's the exact same, but this time we want to wait for a break above the previous lower high. So we make a lower low, lower high, failed to make new lows, still a valid downtrend, but as soon as we break that level, we can look for retests and continuations. Okay, so here, the level we trade from is the previous lower high. Okay, if it was a head and shoulders, this one would obviously be a reverse head and shoulders, but it's still the exact same. The only level we need to look for is the previous lower high. Okay, and easy thing to remember, it's literally the same as a continuation, except, you know, pretend there was an uptrend coming from this way and we're just continuing it like that. Okay, but obviously it's a reversal because price is coming from this way. Okay, but you can see here, imagine this is a higher low. We form a higher high, higher low, and we expect a new higher high to be made. Okay, and obviously this is where we enter. So that's it. Hopefully you guys understand it. Let's look at some examples. Okay, so very stock standard reversal setup here. Let's break this down. So price is trending up. We can see we have higher highs. And just quickly notice what I talked about continuations. Higher high, break that level. Higher high, retest, continuation. Okay, what levels do we trade from? Previous highs. Right here. Boom. Previous highs. Don't get the entry. That's fine. Okay, but that's beside the point. Let's break down this reversal. So we form sort of this structure here. We create a high there, push down, create a higher low, and then make a new high, or fail to make a new high. Okay, soon as we break the previous higher low structure right here, we can start looking for this reversal. We can also validate this with trend break. We form a double top. Okay, so as soon as price breaks this higher low structure, this one right here, and we see price close below this level, okay, we can start looking at price to push back to the previous higher low right here, and then entry. Okay, what do we see happens? Price pushes down. We even see a little double top here. Continuation. Okay, but notice, you know, as long as you can identify this level, you don't even have to have the best entry. If you put a safe stop, you can trade anywhere from there, and you know, you're on the right side of the markets. Now again, obviously, if you want to see more on entries, that's for another video, but this one is about identifying levels and the overall bias of the market. Okay, very simple. And I actually just want to talk about this because you're probably thinking I've missed something here, and I want to explain this because it's quite weird. So what happens here is we make a higher high, we actually form a higher low there, higher high, and then we break the previous higher low. Okay, so this is, you know, something which is very hard, and this is almost one of those trades you might just lose. Okay, because our rules, or my rules that I've said, when we break this higher low structure right here, okay, we can start looking for sells. We break and close below that level. We even create a little double top right there. If we just look on the line chart, it might be a bit clearer. You can get rid of this, you know, double top, break below the previous higher low, but it's a fake out. Okay, so this is going to happen, and this is where your entries at this level start to help. Okay, so I can probably, you know, start to see that on the 1 hour, we may not have got an entry signal. So this is why it's important to have both the levels and the entry signals to show that we're ejecting this level. Okay, but bear in mind, you're going to lose some trades like this. But like I said, this is a system where you can clearly identify the break below the level, the retest, and the continuation. Okay. I won't do an uptrend example because it's all the exact same, just the different ways, and a head and shoulders is also the exact same. All right, we made it to the last one. Hopefully you guys sort of understand what I'm trying to say. And again, feel free to ask any questions. So this one's my favorite one, easily the easiest and most simple one. And, you know, I have a general rule of thumb: when in doubt, trade the breakout or the last kiss, okay? Because it's so easy to identify. Now, there's not a whole lot to it. Essentially, all we're doing is waiting for price to consolidate and wait for a breakout. Okay. Now, the only difference with this one is we can wait for a breakout to the top or to the bottom. It doesn't matter. The only difference with this one is we don't need to particularly trade from a previous high or a previous low. Instead, we're trading from a key level. Okay. Now, a key level is just an area in the market where price tends to react to. So in these areas, you'll see a lot of wick rejections, a lot of indecision candles, and, a lot of potential reactions. Okay. So the two few rules I have is we need to at least have 2 touches either side. Okay. So we have 2 touches either side of that zone. And the way we can identify that, most indecision, so wicks, little weird candles. And the other thing is wait for a clean break. Okay. And the reason being is because the levels are rarely going to look this perfect. It's often going to be stuff like this, fake outs even, like this, and it's going to be something like this. Okay. Now, if we were to, let me just drag this over. If we were to look at this, how the hell can we start to identify the level? Okay. Now, a little tip, click to the line chart. It makes it a lot easier to see these, and I'll show you that in the example. But realistically, where can we see the most touches and the most areas of indecision? Here. Okay. Around this level. We can see I've touched there, fake out there. And again, with these fake outs, the only way you can avoid them is waiting for price to break and close out of these levels, and by utilizing your entry timeframes, smaller timeframes, to find the rejection of those levels. Okay. But that's not in this video. So the other thing I want to talk about is, especially more with these breakouts, it's important to understand that this line I've drawn is not in fact a line, it's a level. Okay. It's an area in the market. Price is not always perfectly going to respect it. But what I want you to notice is that I'm not so concerned about trading the previous highs. So if I was trading the previous highs, I would have to wait for price to push back down to there, which is not the case. Okay. Why? Because we're not trending. Okay. If we were making higher highs and higher lows, I would be trading from the previous high, but we're not. Okay. We can see it's definitely no trend. Okay, if we zoom out a bit, we can clearly see price is going nowhere. So we trade the key level, not the key structure. So these are structures, previous highs and lows. This is a key level. Okay, that's all there is. Same thing to the downside. We don't need to wait for, trading from the previous lows. We can trade these. And this is why I say to wait for a clean break, because often these areas are not that clear. Okay, so waiting for a bigger break doesn't mean price is going to break through here. It just means it's clearly broken above and created that new high. Okay, and notice here we're actually still trading with the trend, because if we break out, we're creating a new higher high and a new higher low. We wait for price to create the new push phase and the new higher high, and that's where we profit. Okay, very simple. Easiest one, most fun one. Yeah, let's look at some examples. So I'm actually going to use this example on GBP NZD of a trade I'm currently in right now. And you can clearly see this is a last kiss or a breakout. Okay, so if we look at this, we can clearly start to see that, this is a key area in the market. We have touches there, touches here. And we can start to see that in this area, price is not really trending. It's creating consolidations, not really moving that much. The next thing, we have touches either side. We have a touch there, multiple touches here, touches there. Okay. So we can start to see this is a consolidation. And just scroll through consolidation. Okay. Scroll through the charts and just try and identify these areas. Consolidation. Okay. So it happens very often, and that's why I say it's the easiest one to trade, and the easiest one to identify. Okay, but let's break this down. So like I mentioned, we don't need to worry about trading from the previous lows or previous highs. Here's the previous low, okay? But the reason we're not trading from this is because there's no trend. Price is not making new lows or new highs. It's all a mess. So what? We're trading from the key level, which is this breakout of a consolidation, okay? And just for interest sake, you can see on the 1H, we have wick rejections and a double top, and that's my entry signal, okay? Freaking can't believe we didn't hit take profit, but that's how trading goes, okay? I'll look at another example, and I'll literally just scroll through this chart and show you guys how often these occur, okay? I think maybe we have one here. Yep, okay? So this one's a bit of a harder one, but we can start to see this is an area in the market where price is consolidating, okay? We're not making new lows or new highs. It's sort of just a big old consolidation, okay? And again, you know, this is not the most clear level, okay? But what we can start to identify is that price has broken below this level over here, okay? And little tip, if we look at the line chart, you can start to see this level a lot more clearly, okay? And again here, where we have this fake out, obviously this is going to happen, but again, that's where that lower time frame comes in, so you can avoid entering these, hopefully. But, you know, like I said, it's not the best strategy. It does lose every so often. So what can we identify here? We break out to the downside, then we push back to this level, and we can see some wicks starting to form, and then we push down. Okay, this is not the clearest break, but it definitely is there. And you can even start to see, you know, this is actually almost sort of like a trend continuation. Okay, so there's going to be times when the level being broken is also the previous low. Okay, so you can see this is also the previous low. Doesn't have to be like that, but it's just an added piece of evidence. So here's another one right here. This one's very clean. We can see a strong consolidation, massive break to the top. Price pushes back, continuation. Okay, go through the charts, backtest it. Promise you, you'll find, you know, these work really well, especially when you can start combining good entry techniques. And there's lots of those. You can scroll through my channel, and I'll put some video links up as well. So anyway, hopefully you guys understood that somewhat. Yeah, enjoy, please subscribe, and I'll see you guys soon.